Hello guys, welcome back to our channel. In today's episode I want to share with you guys my secret of trading synthetic indices. A lot of person has been asking me to share this and I have decided to share it. Beside that is one promise that I made online, and I've decided to share it for free. I wouldn't have shared, but it was a promise and I must fulfill what I promised to share. This is my strategy, and I ask for those who don't have enough money to pay for the mentorship, and a lot of persons DM me, and that's the reason why I've decided to share this strategy. I wouldn't have shared it in public, but I want everybody to benefit from this strategy. It costs money to learn it, but I want to give you guys this for free. So we'll be working with only 4 patterns, and I would like you to stick to the end of this video so that you understand everything I'm about to share with you. If you are new to the channel, please kindly subscribe, and don't forget to turn post notification button in case of a content like this. So let's just dive into the process. You can see right now, let me just go to my drawing board so that I can get into what I want. Like this place, this is my, let me get my brush and show you something. We'll be working with 3 to 4 pattern. Exactly, that is 4 for now. So we need to work with the first one is M pattern. I'm sorry, I don't know how to draw. The first one is M pattern. This one is M pattern, and second one is W pattern. This is it. Then the third one is head and shoulder. Head and shoulder. The fourth one is inverse head and shoulder. So we'll be working one after that. This is pattern. This is the about. This is W pattern. These are the reversal pattern that we'll be making use of. Don't mind my drawing. I will still take you to the chart and show you exactly how it works. So this one, this inverse head and shoulder. So let me take you to my chart so that we see exactly what I'm talking about. So these are the 4 patterns that we need in order to get everything we're talking about. This pattern right here is only what we need, everything we want. So let's go to my chart so I'll show you everything you need to know. So this is my chart. These are volatility trend index, 1 hour time frame. So look at this 1 hour time frame. Whenever you come to 1 hour time frame, you first of all you check for break of structure. If you are to buy, you allow the market to break structure higher. If we sell, you allow it to break structure lower. Just look at what I'm about to share with you now. So from this value zone now, look at from here at this joint here, we had a break of structure higher as market took this buy side liquidity and gave us the other pattern we are talking about. This is the shoulder. This is the head here, and now this is the shoulder again. As you can see, a market broke this structure here, wiped this sell side liquidity, first broke buy side liquidity. You see, this side liquidity was taken and took this sell side liquidity and formed this here. Watch from the beginning. Buy side liquidity was taken and formed this pattern, reversal pattern. This is sell pattern, this bearish pattern. As you can see, this reversal pattern had got this thing formed. You can use your trend line as well and see what I'm talking about. Market broke this. You can use your trend line, first, second, third touch, and broke it down. You can see it, watch it very well. You can see what I'm talking about. So give us this pattern here and drop this other block right here. You mark down your order block and allow the market to get to this place, and then you sell down to this place and see what happened exactly. A market got to this zone, this very block. This is the block we are talking about here. A market got to this block and gave us this draw, you see, from this very place, so down to this very zone, which you can see from this zone to this zone is very huge. You're gonna gain a lot. So this is exactly how this thing works, and this is head and shoulder pattern are the first pattern, this first one. So let's go. Our market came back to this one. See exactly. First, this one you see, first took the buy side liquidity. This one cleared, broke structure lower. As it broke structure lower, you have to train your eye very well so that you understand what I'm talking about, and watch the formation of this candle. As the market broke this structure lower here, and they give us this inverse head and shoulder. You can see this is the shoulder here, this is the head, here comes the shoulder right here. Again, you can see this shoulder right here at this place. You can see it very well. If you go to lower time frame, you will see very clear. And drop this other block here. You can see there is other block at this zone. This block, this bearish candle here. A market come back to this place. Note that there is a break of structure here at this zone. Internal break, another break here. A market came back down to this very zone and gave us this spike here. This spike. Are you seeing what I'm talking about? Look at this pattern again. Are you seeing the pattern? Just watch out. Market came back here. Look at broke structure. Clear all this. You see? Clear all this. And came back here. Gave us M pattern. Know that you're working with three pattern, M pattern. Head, this is one. Head and shoulder. Inverse. This one is what? This is called M pattern. So at this point in time, you have to train your eye very well for this M pattern. And as you're watching this, you can see that from the place market took out this low, begin to make kind of break of structure. Even from the beginning, there is kind of a shift of market structure. You can see not equal height. There is a shift of market structure at this zone. A market still broke this, came back here. You see, broke here, reaching at this zone. Went up. Are you seeing it? But this is where we are interested on. This is a minor trend. You can take this trade, but for me, it is very risky to trade. The only reason why we trade this, I will just risk a bit because of this fair value gap here. This is just the reason why we trade this. Because of this fair value gap, I will just trade it with low risk. I cannot add much. Which if you add this trade here, I will show you. This is where I will show you exactly what you need to know and how much you make. That's the reason why sometimes when you see somebody flipping account, does not mean that they don't blow account. They blow account. Flipping is not a professional way of trading, but I will show you how to flip account right now. As you can see that this market get to this place, and Larry up here, you can see there's kind of liquidity void at this zone, and drop this block, liquidity void at this zone, and you can see from this place there is a block here. There is a block at this M pattern here. This is what we need. This M pattern, and there is a block here. Likewise, what we did here and this place. So there is a block here where if market gets to the place, you have to sell this market down to here. So our market got to this very block here. Now see it here, we make our entry. Let's calculate how much we make from this. This is, note that this is volatility 10 index. So from this very place, let me just use my center tool. Like this is the beginning of the block here. This is the beginning of the block here. Yes. For instance, if you place your like a sell limit and your stop loss should be just above this, then your TP should be at this at the body of this block here. You can see it at the body of this block. You can see it here. So how can you know the actual amount to lose and the actual amount to profit? Just let me just dive into my calculator and show you exactly how it works. Again, I minus the value of this entry point to the stop value, and the stop value is H0. You can see, let's just do it right now. H066 80, I'm sorry, H066 0.620 minus the entry value. This is the stop value, this is the entry value. Now minus the stop value. The stop value now is 8058.080. I have this 8.5, multiply it by 0.5 as the default lot size. That's 0.5. You have 4.27. That is what we lose if you lose this trade at this point. Then what will be your TP value? The TP value right now will be like, this is the entry value minus the TP value. It will give you the actual amount that you will profit from this trade. So the entry value is A058 0.080 minus your TP value. TP value is 7958.542, which is 9.9.53 multiplied by default lot size, which is 0.5. We have 49. Imagine entering this trade as, let me say, having two positions. That means losing $8 in this, and we're having this multiplied by 2. We're having exactly $99. So if you want to flip this account, like you have it like $30, you enter 3 position here, and the 3 position of 4, you'll be losing $12, and we're having this, you will have 49.7. That's what I'm saying, 49.7 multiplied by 3, you're having $149 in this one trade. From this value zone down to this place, you'll be having $149 from your $20 account. Okay, let me say that you have $10 account, you place like 2 trade here, you'll be having like $99 in one trade. You see how it works. So the reason why most of you are blowing your account, because you don't know how to calculate the amount you are losing and the amount you are gaining. Sometimes it happened to me when I was starting. I always place my trade without calculating the loss, and most of the times when it goes to my favor, I'll be very excited. But anytime the market goes against me, guess what? My account will be almost blown, because of course it happened to me one certain time. I placed a trade with $10, and I think I lost about 8.5. You see, those are and the account was already gone. So it's because I used small account to grow it, like I think a V jump 100. I started with jump 100 and V75 1x. That is where I started from. So this is exactly how this strategy works. Stick to the pattern. We have only 4 patterns here: head and shoulder, inverse head and shoulder, W pattern and M pattern. This is exactly how this very thing works. So I would like you to rewatch this video, watch it very well. If you have any question about what I have just taught you right now, feel free to contact me on my Twitter handle, my WhatsApp, my Telegram, and any means of getting in contact with me. And don't forget to drop your comment on the comment section so that I will look at the area that you need my help. And I promise you that I will offer you whatever thing you need me to offer you. For the fact that I have it, I will offer you free of charge. I'm not charging you anything. This is just the promise that I promise a lot of persons, I think in Facebook and other places, that I'm gonna share with them my trading strategy, and I am now doing it as I promised. So don't forget, please, to subscribe and support me in this channel, and share it with your friends who might be in need of it, so that we grow together. And if you have your question, don't forget to drop it here. From the description of this video, you can get a link to my Telegram group where I share free signals. I don't charge anything for the free signal. It is free of charge. Join my Telegram channel for daily signal for both Forex and the synthetic indices. Thank you for watching, and stay tuned for the next video, guys.